Consumer stocks, they are in focus right now. Godrej Consumer has moved to the high point of trade, up 6% right now. Even dabur is doing extremely well, 4% higher. And on the back of that, we are seeing some traction in HUL. We are seeing some traction in Colgate. All the stocks actually doing a lot better. We do have Abneesh Roy of Nuvama joining in. Abneesh, the updates do suggest that the worst of demand is behind all these companies. What we want to understand is that these stocks which have been underperforming in the past, can they return to their glory days just basis this update coming in? Yes, there is a relief rally that we're seeing in a lot of these stocks, but the underlying problems, not all of them have gone away, right? While there is some sequential recovery, margins are still not back to their all-time highs. Companies are believing that there could be some improvement in the second half of this year. What are your thoughts on this entire space and the updates that have come in over the weekend? Anything that you liked in particular?
Sure, thanks and good afternoon. Yes, we were expecting stocks to do quite well, and we expect that the recovery in terms of urban will soon start. In some categories, it has started. So, four key things. There is high under ownership in the sector. If you see the FI selling numbers which have come last 2 months, there's been a lot of FI selling in the FMCG sector. And if you see the business update, they are telling a different side of the story. So Marico, in our view, we don't rule out 9% volume growth in the Q1 for the domestic part of the business versus 7%, I think, which the consensus was expecting. Again, same thing, Godrej Consumer, HI saw a spectacular recovery in the June month versus earlier expectation of 2 to 3% India volume growth. They will end at around 4 to 5%. Even Hindustan Unilever, we expect that it will positively surprise versus the muted expectation, which I think most part of the consensus has, and the fund managers also from a HUL perspective have a very muted expectation. We expect that maybe 4 to 5% sales growth for HUL is highly possible in Q1. So we are seeing the raw material side also play out. So you asked a right question whether margins will improve. Yeah, in food companies, it will start improving. So Britannia, Bikaji, to an extent Nestle, etc. For Godrej Consumer and HUL, our sense is exit part of the Q2, we will see the recovery because there's a lag of PFAD versus palm oil. Coffee cost has also corrected. So except one or two like copra and maybe tea, most other commodities are under control. So valuation clearly favorable, under ownership, recovery from macro perspective. HUL in the AGM highlighted that a lot of the macro is now falling in place. I will expect the sector to do well, and consensus upgrades are also possible. For someone like a dabur, I think still they need an answer to Campa Cola and overall Chyawanprash, how to contemporize the product to the youth. I think that's needed. But in most parts of other where non-summer is there, we are positive. Summer portfolio clearly will see challenges. So Varun Beverages, Imami, etc. will see weak numbers in Q1, but that's because of the season.
Okay. Well, Abneesh, Godrej Consumer is reacting very well to its Q1 update. What did you think of it and the fact that they've said that volume growth has been strongly competitive and they expect it to sequentially improve?
Yes, so 2-3 things the consensus liked on Godrej Consumer. So this is the second successive quarter where their slightly challenging category of household insecticide has seen a good number. So last quarter Q4 was 15% sales growth in the HI in India. This quarter, again, mid to high single digit, and that's not a bad number. After a very weak May month. So May month was very challenging. June month saw spectacular recovery. Second, of course, the Guam part of the business, so Africa, etc., that has seen a strong double-digit volume and sales growth. So that's a key positive. Third, of course, outlook from a margin perspective, clearly worst is behind. Q2 still will be under pressure more because of the lag effect. Otherwise, if you see palm oil and PFAD are correlated, there is some lag. So in H2, we'll see very smart recovery in the margins. So investors are getting a comfort that yes, Indonesia is challenging for the next 1 year, but that's a very small part of the business, right? Ultimately, India and Guam are bulk of the business. And there we are seeing that numbers are improving both on the volumes and from a margin outlook, we'll see recovery, strong recovery in the margins in H2 for GCPL.
All right. I wanted your thoughts in particular on the consumer discretionary side. Now, it's not that we got any weak numbers from Jubilant FoodWorks. It was extremely strong. The second or third quarter of double-digit like-for-like growth. Even Nykaa, no problems out there. At the same time, Kalyan Jewellers as well reported a very strong growth at 31%. But all these stocks have been outperformers in the past and are now selling off on the back of good numbers. And which is why my first question to you, Is it only because of under ownership and underperformance that these stocks are rising? Can this outperformance sustain? Because in the case of discretionary, they aren't sustaining. At some point, valuations kick in and we see profit booking. Case in point, Jubilant FoodWorks down 4% right now from the highs.
Yeah, in any stock, I think there will be multiple things to watch out. But yes, broader theme, what we see is staples under ownership is there. Plus rural, whatever can go right in terms of good monsoon, government having a more liberal exports policy, a lot of freebies being given by every state government, etc. That obviously the discretionary companies have a much lesser play in that. So that is one more thing. Yes, from a raw material side, again, if you see the FMCG companies will have more headroom to retain that. In QSR also, maybe there'll be some benefit here and there in terms of the margins in the second half from a lower dairy cost, etc. But overall, FMCG margins clearly from a palm oil perspective, from a lower coffee cost from the Q2 perspective, or even in paint companies, if you see, we see that gross margin should improve this year and EBITDA margin also mostly. We see that the margin trajectory is much more predictable and on the upswing for the FMCG rather than discretionary. And discretionary stocks, you rightly said, last 1 year, 2 years, they have done much more better. While FMCG last 3-4 years, many stocks like HUL, Dabur, Asian Paint have not given any kind of wealth generation. So that's the catch-up which is also helping.
Staples over discretionary is the big call right now. On retail, I wanted your thoughts also, because we did get the update from Avenue Supermart. 16%, one wouldn't say is very bad, but the stock saw a bit of a sell-off post that. Trent was the big underperformer, 20% growth only versus 25% that the company itself had guided. And we saw a reaction on the stock on the downside, 11% lower on Friday. What have you made of V-Mart, Avenue Supermarts, V2 Retail and Trent? And what's the trajectory for them likely to be going forward?
Yeah, absolutely. DMart, Avenue Supermart, good set of numbers, 16%, 17%, 1 quarter here, 2nd quarter. I think broadly it's in the same ballpark number. The opening store in Agra, I think that's a very key development because UP is India's largest population state. And if they're going beyond NCR, that clearly shows that UP over the next 3 to 5 years can become really, really big in terms of store addition. Store addition was also quite good for Avenue Supermart. So Avenue Supermart, overall, I will say that should do well as a stock, medium term, long term. Of course, margins we need to see because the quick commerce continues to be an issue. But quarter on quarter, we see some recovery in the Avenue Supermart because of the seasonality. Coming to the gold jewelry companies, there most of the growth is coming essentially from 2 things. One is very high gold prices, and second is the store expansion. So that's why I think because stocks have done reasonably well, there is a question mark that if gold corrects, then what happens? So that is the small difference. So you will not have every stock react to the good numbers every quarter. In terms of the apparel, clearly V-Mart had slightly impact of the shift of the season, right? Eid has shifted, and that's why my sense is some of the apparel companies will see that impact in some of the market. That doesn't mean that the entire year will see that impact. So it's more of a seasonal shift, festival shift in some of the apparel retailers, which is impacting them. Nykaa, frankly speaking, here the margin improvement is what investors are watching for. Of course, we had a block deal last week, which was slight supply overhang. But in their core business, I think they are doing reasonably well. Now investors are looking for overall console margin improvement, which I think once that happens, then the stock will lead it. Till then, I think overhang on the Nykaa is there from a margin perspective.
Okay. Well, Abneesh, what has really been in focus is the entire paint space. And interestingly, we had a brokerage which upgraded its call on Asian Paints as well as Berger recently after 4 years of a negative stance. The fight for number 3 continues and it's probably gotten even more difficult now. But your sense in terms of what the dynamics would be and how they would play out when it comes to earnings for these front-facing paint companies now?
Yeah, good question. Again, 3-4 things. First is here also we are seeing core paints. The volume recovery is there. If you see the second half of FY25, the core paints for the industry saw some decline, 1 or 2%. Don't measure this against the reported volume growth because the reported volume growth of Asian Paint and some of the paint companies also has non-paints like waterproofing, construction, chemical, which grow obviously much faster, putty, etc. So what we are picking up now, the core paint for the industry is seeing low single-digit volume growth. So clearly this mirrors with what HUL is seeing in terms of macro improvement leading to overall demand improvement. Marico reporting stronger volume growth. Godrej Consumer also reporting stronger volume growth. Dabur seeing mid to high single-digit volume growth X of summer in most categories. So it's again mirroring that. Paint, in our view, worst is behind on the demand side. Gradual recovery will happen. That also is reflective in terms of the very high promotional intensity which was there in the mid and premium end of paints. We are picking up that promotional intensity is now high largely in the lower end. When I say at the mid and premium, it is not as high. I am referring to the peak. From the peak, there is a correction. It's a lower intensity. Of course, consolidation has happened, and once the approval comes, Axo will not be there. It will be JSW. So yes, in this industry also, growth is coming back. Gross margin, no problem whatsoever. So we see Asian Paint deliver 18 to 20% EBITDA margin for the full year, FY26 versus 17.5%, I think, last year. So there is an improvement on EBITDA margins for the market leader. Sector, again, very under-owned. Again, Asian Paint stock performance last 4 years, there has been wealth destruction and not much. So I would say that, again, Asian Paint HUL over the next 1 year, if the demand recovery happens, good wealth generation will happen.
All right, take that point, Abneesh. Thank you so much for that. So the big headline for today is the next 1 year belongs to staples over discretionary. The last 1 year, discretionary has done well. Now it's time for staples to shine after underperforming. Well, will they be supported by commodities or not? We have Manisha Gupta on the other side of this short break joining in. Vimal Kothari, the chairperson of IPGA, joins in on the Commodities Corner.